Hello viewers, welcome to my channel. I am Hashim Ali Khan. So now I am going to start a new topic in the subject accounting, and this topic is other receivables and other payables. So far in accounting, 4 chapters I have completed. First one, trial balance. Next one, irrecoverable debt, incomplete records, and lastly, capital and revenue expenditure. The videos on all the theory, problems, everything I have already uploaded. So if you have not watched, go to the earlier videos, watch the videos completely, get a full command on the subject of accounting. And remember, this subject accounting is for IGCSE students, for Cambridge students and Edexcel Pearson students. And one thing I want to make it clear, watch the video till the end. Don't skip in between and don't join in between if you want the complete command on the topic of this accounting. So before starting the subject, before starting the topic of other receivables and other payables, take a screenshot of the points which I have written on the board and note it down so that you will have a permanent record, and just before examination you can be able to review it and get a good command on the subject. And the theory is very important because the coming problems and short questions, MCQs, everything depends on the theory. So if you watch with full concentration, definitely you can enjoy learning the problems on this topic. Take a screenshot, then I'll explain each and every point on other receivables and other payables. Come on. Now I'm going to start other receivables and other payables. So before understanding the meaning of the term other receivables, other payables, a student must recall the point regarding accounting concepts. Different accounting concepts are there: business entity concept, money measurement concept, accrual concept, materiality concept, prudence concept. All these are the different concepts. Among them, one of the important concept is accrual concept. So before understanding other receivable, other payable, we'll recap the points of accrual concept, accrual accounting concept. So according to this concept, according to accrual concept, according to this accrual concept, the profit for the year is the difference. What the accrual concept says, the profit for the year is the difference between the revenue and expenses of the year, and rather than the difference between cash received and cash paid. That means every businessman wants to find out how much profit earned during the year. So for ascertaining the profit earned during the year, we need revenue and we need expenses. So we need all the revenue of the current year and all the expenses of the current year. So you should not think that whatever we received is the revenue and whatever we paid is the revenue. It is no, it is whatever we paid is the expenses. No. We have to find out what are the revenue and what are the expenses of the current year, because there may be some revenue, there may be some expenses which are not related to the current year, that we have to adjust it. The revenue and expenses are not relating to the current year must be adjusted, and that is what called other receivables and payables. So what the accrual concept says, all the revenue and expenses of the current year should be taken rather than cash received and cash paid. So in other words, all expense of the year should be considered whether paid or not. What this accrual concept says, all the expenses of the current accounting year should be considered whether paid or not. Similarly, all revenue of the current year should be taken whether received or not. Next, accrual adjustments are required to be made to record the expenses that has not yet paid and the expenses which are paid in advance. So what is this accrual adjustment required? the accrual adjustment are required for those expenses which are not yet paid and those expenses which are paid in advance. Paid in advance. Some expenses are not paid during the accounting year. That means expenses are incurred but not paid. These are called outstanding expenses. We have to make the adjustment for outstanding expenses. Similarly, some expenses are there which are paid in advance. Again, adjustment are required for payment in advance. These accrued expenses, outstanding expenses, and prepaid expenses have to be adjusted. And those adjustments are called accrual adjustments. Now, examples of accrued expenses are salaries payable, interest payable, etc. At the end of the year, we can see some of the salaries are due but not paid. Interest is due but not paid. These are called accrued expenses, outstanding expenses. Similarly, examples of prepayment. Prepayment means paid in advance. For example, we have paid the expense of the next year in the current year itself. We have paid the expense in advance. These are called prepayments. So these accrued expenses and prepayments are called accrual adjustments. Right? So this is the explanation about accrual accounting concept. Now what are the other payables and other receivables? First of all, other receivables are referred to as other receivables are referred to as prepayment. Remember the concepts, words. Other receivables are known as prepayments and other payables are known as accrual. Accruals, other payables. Prepayments, other receivables. These two concepts you remember. Now to calculate the profit, the focus should be on revenue expense that are paid on time and are relevant to the accounting period. Just now I told you, whenever you want to find out the profit of the accounting year, current financial year, we need all the revenue and all expenses relating to the current accounting year. For example, our current accounting year is 2021. So for 2021, we need the profit. We need all expenses of the current year and all incomes of the current year. We don't require any expense of previous year 2020. We don't require any expense of next year 2022 because our current year is 2021. So all expense of 2021 only we require. For example, wages paid in September are for work done in September. Similarly, electricity paid in March is for the electricity used in March. That means we will make the payment of only those months which are in our accounting period. Whenever we pay something, we should pay something for that period of the accounting period. In real world, however, not all transactions will match the period of equation. In reality, in practical world, what will happen? We pay a number of expenses, but those expenses are not relating to the current year. We pay a number of expenses which are not related to the current year. It may be for the next year or it may be for the past year. In real world, this will happen. For example, we have paid the salary, but some salary belongs to last year. We have paid some salary which may belong to the next year. Similarly, we have paid the rent, but that rent completely does not belong to the current year. Some rent belong to the previous year. Some rent belong to the next year. So all these need to be adjusted. So for example, rent may be paid in advance, prepaid. Some businesses, they will pay the rent in advance. It is called prepaid. And while bills may be paid after the commodity has been used. Some bills are paid. Example, stationery has been purchased but not yet paid. We have to adjust it. Salary is due. Electricity is due. These are called accruals. So whatever is due is accrued. Whatever is prepaid is prepayment. Right? And in this chapter, we deal with other receivables and other payables for both incomes and expenses. So we have to see the incomes, we have to see the expenses, what are the accruals and what are the advances paid in advance. That we have to adjust. How to adjust, I'm going to explain, and we'll do the problem. You will get the complete command on the topic of other receivables and other payables. So first of all, individually I'll explain you other payable. First, other payables I'll explain you. These are the expenses of the period, but not yet paid till the end of the financial year. Other payables means those expenses of the current year but not yet paid till the end of the accounting period. Example, our year is 2021. The total salary of 2021 is 1 lakh rupees. Total salary of 1 year. But when we open the salary account, we are seeing that only 80,000 is paid. 20,000 salary is not yet paid. This 20,000 salary of current year not yet paid is called other payable. Is called other payable. The actual salary is 1 lakh, but according to salary account it is only 80,000. 20,000 is due. That due is other payable. So for example, salary are paid for 11 months and 1 month salary is outstanding. Same example I have given. Out of 12 months of the year, only 11 months salary paid, 1 month salary business has not yet paid. This will be added to salary. This 20,000 rupees which is not yet paid will be added to 80,000. So 80,000 salary paid, 20,000 unpaid, you add up both, 1 lakh rupees salary will be taken in income statement. Similarly, the 20,000 salary which is unpaid should be taken under current liability as a other payable. So in statement of financial position, current liabilities. Under current liabilities, we'll take other payables. In that other payables, we'll take accrued, salary accrued 20,000. That's it. Similarly, incomes received in advance will come under other payables. Incomes received in advance. That means during 2021, some commission is received, but this commission is not completely of the current year. Total commission received is 1 lakh. When we open the commission account in the ledger, we will see 1 lakh rupees commission received. But when we study it, when we scrutinize it, it is seen that 20,000 commission is not of the current year. It is for the next year, 2022. Then this 20,000 rupees commission is received in advance. That will also be taken under other payable. Any income received in advance. For example, commission received in advance. This will be deducted from commission in income statement. So what is the adjustment? In income statement, total commission received 1 lakh. Out of 1 lakh, deduct the commission which is received in advance. 20,000 is received in advance. Deduct 20,000, 80,000 commission only you take in income statement. Remaining 20,000 commission, you take it under other payables. Other payables under current liabilities. That's it. So this is the explanation about other payables. Now other receivables. So what are other receivables? These are the expenses paid in advance or prepaid. Expenses paid in advance or prepaid and for the current financial year, and the income of the current year not yet received. Two items you have to remember. These two items will come under other receivable. First of all, the expenses which are prepaid, paid in advance. First thing. Second, incomes which are not yet received. Not yet received. These two are other receivables. With the help of example, I'll explain you. For example, insurance prepaid. It will be deducted from insurance in income statement and again shown as other receivable under current assets. Example, I'll tell you. Insurance account. When you open the ledger of insurance account, you will see total insurance paid during the year 1 lakh. 1 lakh rupees total insurance paid. But in the adjustment it is given that out of 1 lakh, 20,000 rupees insurance is paid in advance. Does not relate to current year, it will relate to the next year. 2021, we have paid 1 lakh rupees insurance. And adjustment it is given that 20,000 insurance is relating to the next year. That means current year we have paid in advance. Deduct. That 20,000 rupees insurance prepaid will be deducted from a 1 lakh, and 80,000 insurance will be shown in income statement. And this 20,000 rupees which is paid in advance should be taken in the statement of financial position as a other receivable under current assets. So one example I have explained about insurance. Similarly, incomes of the current year to be received, that is commission to be received, it will be added to commission in the income statement and again shown as other receivable in the current assets. Second example I will give you regarding commission to be received. If you open the commission account, if you open the commission received account, you will find commission received 80,000. But adjustment, it is saying that 20,000 commission is still to be received, is receivable. That this 20,000 will be added to 80,000 in income statement. The total commission of the year is 1 lakh. Is 1 lakh. And this 20,000 rupees commission which is not yet received, that will be shown as other receivable under current assets. These are the other payables and other receivables. Now next topic is adjustment for stationery used during the year. One more adjustment, accrual adjustment required, is regarding stationery consumed. When you open the stationery account in the ledger, you will find that stationery purchased 1 lakh. So during the year 1 lakh rupees stationery purchased. But adjustment, it is given that out of 1 lakh, 20,000 stationery is unused at the end of the financial year. At the end of the year, 20,000 is unused, still having. So how much is used? 80,000 only is used. So what is the treatment? In income statement, stationery 1 lakh minus unused stationery. Stationery not yet used, deduct 20,000. Only 80,000 stationery should be shown in the income statement. And the 20,000 stock of stationery should be taken as other receivable. As other receivable under current assets. Under current assets, that's it. This stationery is formed. Stationery purchase may not be used up entirely during the period in which it is bought. The stationery is often left over at the end of the accounting period. Just now what I have explained. This stationery is a form of prepayment and needs to be carried over to the next year. Out of 1 lakh rupees stationery purchased, 80,000 is used, 20,000 unused. This 20,000 stationery will be carried over to the next year. Stationery unused will be deducted from stationery purchased in income statement, and again stationery unused will be shown as other receivable under current assets. Just now what I have explained. Total stationery purchased 1 lakh. Out of 1 lakh, stock of stationery unused 20,000. So 1 lakh minus 20,000, 80,000 stationery should be taken in income statement. And this 20,000 unused stationery should be taken to the statement of financial position. Other receivable under current asset. That's it. Lastly, all the amounts owing for expenses are added together and shown as other payable. All the amounts owing means the business has to pay to others. All the amounts owing by the business, will be added together and put it under other payables. And this other payable will be taken under current liabilities in the statement of financial position. This point you have to remember. With full concentration, you listen this lecture, because all these points you will get in questions. In the coming videos, I'll explain you the questions. So at that time, you must have in mind. So all the amounts owing should be put together and take it under other payable as a current liability. Next, all prepaid items. Prepaid means paid in advance. All prepaid items are added together and shown as other receivables. So prepayments, other receivables under current assets. Under current assets. So other receivables under current assets. Other payables under current liability. All owings other payable. All prepayment, other receivables. That's it.